Welcome to Momentum Monday. Today, Sunday, March 29th, 2020. And Howard is Manscaped.
Yeah, turns out I've been using a cheap China knockoff of our China knockoff. It doesn't have ceramic. Ellen just walked in. Ceramic. So Ivan, you're willing to cut your balls for the sake of saving $10. So if you want to get the real thing,
Whatever it takes, right?
you use social leverage and get 20% off when you go to manscaped.com. All right, you walk us through the markets.
Or let me share my screen then. All right. So last week we talked about some positive momentum divergences, how the number of new 52-week lows has been decreasing steadily despite the markets making new lows. So we did have that relief rally that often comes from positive momentum divergences. And so the S&P is right back near its declining 20-day moving average. And so everyone is wondering, what's next? I think what's next is most likely a choppy range-bound action for the foreseeable future.
Yeah, that's the best I can hope for.
Yeah. And so typically after deep market corrections, the stock that outperform during relief rallies are the ones that are hit the worst. And we saw that last week with many of the mortgage investment trusts, airlines, casinos. Many of them bounced between 50 and 100% last week. Let me just show you a few examples as I'm talking about it. For example, Wynn, basically doubled in a few days. The home builders ETF NAO, which is in the three times leverage, went from 5 to 50.
Oh my God, what is that? What is that? You guys, that went from 100 to 5?
That's the home builders ETF, but 3 times leveraged long.
Oh my God, this is like people. I mean, I've been a victim of these before. How do you time something that went from 100 to 5?
Well, when you have the actual home builders index going from 50.
No, I get it, but like, why not just trade the home builders? I know you want the leverage, but Jesus.
Yeah, I mean, the leverage ETFs are good short-term trading vehicles. They're not good.
I guess you can't hold them overnight, like after seeing that. Oh my God.
Well, you can hold them for a swing. Absolutely, you just need to time your swings properly.
They could have shut that. They could have shut that triple leverage. That happened with XIV. They can close it down on you.
Oh yeah, they can definitely liquidate them, as we're seeing with some of the oil ETFs right now. I think this one, Oil U, which is like.
I just have to tell people, like, trade in a panic. Don't do yourself a favor. Just trade the actual ETF, not the leverage ones, because they can shut it down on you.
All the underlying stocks, yeah. If you're trying to catch a bottom in those ETFs, don't do it.
It's happened to me. I just can't, in good faith, even talk about it. But that is wild. That 3 times, pull that up. That is crazy. Somebody made a lot of money shorting those.
Okay.
No, the home builder 3-time ETF.
Oh, nail, yeah.
Oh my Lord, nail. They should call it coffin. Oh my God, can you give me a dip? Oh my goodness. That is incredible. That's breathtaking, dude. That is why.
Well, the underlying XHB went down 50% in a month. So.
I understand, but in a panic, you think you've got to remember that, like, trading these, they could shut that down. I mean, obviously that was the fear, that they could shut that down. So you caught a move in that?
Oh yeah, I did. I caught a pretty big move in that. Also in some mortgage investment trusts. I did.
You didn't hold it overnight, did you?
I did. I held it overnight for a couple of days. Yes, I did.
All right, congrats to you. Okay, so you're saying best we get is chop. Like, I mean, your best guess is that the best we can hope for is a chop.
So, I mean, I'm not saying the best, but the most likely scenario is like big wide range choppiness. And it could be really big. Right now, the S&P is, as I said, is back to its declining 20-day moving average, but it's also the same spot right here is also the 200-week moving average. So this is a big spot here, 260. It's a pretty significant
Yeah, and
spot.
it tagged it Friday afternoon.
But so if this relief rally has more room to run, we will have to see some form of rotation from the laggards into some of the stocks that held the best during the correction. And as you can see, starting Friday, even Thursday, some of those laggards that outperformed last week, they started to fade again. So now it's really important to see if they can form a higher low, some of them, or they'll just continue just lower and just go below their momentum lows.
Yeah.
In the meantime, on Friday, I saw a notable move of capital back into coronavirus related theme stocks. Many of them just started to bounce on Friday, like this one, a bunch of biotechs.
Is that a okay? So yeah, Quidel is one that had followed, just kind of lost track of. So some of these biotechs related to testing and
vaccines and also companies related to diagnostic tests.
yeah, but Moderna is something that likes getting a lot of coverage from smart doctors and bio. That's like kind of a newer biotech.
So definitely the past 2 days of last week, we saw a rotation into the coronavirus stocks after they significantly underperformed early last week when money went to just into the worst hit sectors.
Well, I think as this persists, the first move in Corona stocks was all speculative, all speculative. Now we're starting to see institutions try and figure out, okay, if this is going to be 6 months to 2 years to a yearly occurrence, which are the company's best positions? So I think Quidel, which already its competitor was recently bought, may not be directly related to COVID, but obviously taking out highs during this. It's an institutionally followed stock, going to make money next year. This needs to be on everybody's watch list for years to come. Regeneron, RGEN, seems to be around this space.
Well, they're not testing, they have a drug that.
Yeah, inflammatory stuff. You can look at ResMed, RMD, which got just annihilated, but gave people an entry. I bought some last week, traded out of it quickly. Like it's broken, but like respirators, sleep apnea, my sleep spots. Medtronic, I also traded out of. So if people follow me, I was buying that and traded out of that. Again, this will take time for these correct. If you look out 5 years, Medtronic is a hold. If you look out, if you can make 20% in 3 days, I don't care to own 1,000 different stocks right now. So the leaders shaping up are Quidel, Regeneron, DocuSign, these cloud stocks like DocuSign.
Yeah, Zoom, Teladoc, definitely they're shaping up to be big leaders.
You've got to take category leaders. You can't just say any cloud stock. They've got to have a particular use case for work at home. In the legal profession, DocuSign is just going to be more pervasive, as people don't travel and do eye to eye and face to face. So DocuSign. RingCentral is one that a lot of my enterprise friends, it's got to be on everybody's list. I haven't fully understand their product because I don't use it. But obviously, because they develop software for firms to communicate with staff, obviously that has bounced back extremely well. So while you were, no doubt you're a good trader and we're looking through the wreckage, I'm trying to think through from a venture standpoint and from a leadership standpoint where the true leadership is. I'm not trying to scalp broken things like casinos. I get it why people do it because the VIG is so good. But I think most people should be focused. For sure, people that want to trade and swing trade should be following you. But most people to reposition their portfolios now have to use this time, Ivan, to get out of the stuff that rallied. Let's take a look at Disney, for example. Great company. I've owned it a long time, but I took Thursday and Friday to just take some losses. And move my money elsewhere because in a world of less, look how weak that bounce was too, right? Like I wanted to sell it on a bounce, and that may be the best bounce we get for a while with the parks closed and with ESPN basically shut down, and the fact that there's going to be some some changes in behavior, as great as the theme parks are. And so I'm looking for where the real good bounces are. And I think we just went through them in Regeneron, DocuSign, Qdel. What were some other leaders that showed up? Zoom, Teladoc.
Zoom, Teladoc, definitely many of the enterprise software stocks held better than the rest. I mean, they're not looking great overall, but definitely had
definitely want to go higher if the market, if this passes quickly. You're trying to assume, again, I don't think you should be, going up to 100% long unless you're trading 50% of it during the day. But you can see which companies want to lead, where the money's going to flow if this is a shorter pandemic than most. So it's cloud-based, select biotech. The consumer brands want to bounce, as we talked about last week, Starbucks. It's not going to be pretty, their numbers, but it wanted to bounce. Lulu definitely bounced too much. I kind of lightened up my core position because, at 130, it was a joke, but at 200, with stores closed, not a bargain. So you can see that you need to reposition your portfolio, and the market gave you maybe not the greatest bounce of all time from how vicious that sell-off was, but it's still your chance. It could be your last chance to reposition if we're going to go into another, real tailspin. And, hopefully we don't. But I think when you get a 40% bounce in brands, you've got to, take it. I was looking at McDonald's last week and bought some, but also, it's not going to continue going up if this persists, even though only 50 stores are closed, right? You can go to a McDonald's drive-through and it's pretty orderly around the country. So I think the strong gets stronger. The same thing we talked about last week once this resumes, but there's going to be a ton of new leadership. And then what are you eyeing this week, Ivan?
I absolutely agree. I think the coronavirus pandemic has opened the Pandora box, and we'll see a lot of new trends that will persist for years. It's not going to be just a couple months. I think a couple of the big trends, I'm going to talk about. One of them is testing. I think everyone will get tested for everything all the time. So diagnostic.
But Apple will benefit from that too because of your phone, and that's the centerpiece of
Apple, Amazon, absolutely. There will be directly or indirect beneficiaries. And then another trend, maybe home fitness equipment stocks. It's also could be.
Which one you looked at? Nautilus, which I can't stand.
A couple of them, NLS and also Peloton. Obviously it's declining 50-day, but it's kind of setting up here.
And I don't think it can, as a hardware business, I think people have to be patient here if they really like Peloton, because it's a new thing in the sense it's not for the masses at the price that it's at, but by giving away their software, they're trying to convert people. I also think Peloton, if you pull it up, Ivan, it's actually doing pretty well. I don't own it, but I would say that of the IPOs, where everybody has a chance to now have sold their stock because we're 6 months out or we're approaching that. It's one to keep an eye on, I think. Yeah, we'll pull that up in a sec, Ivan. But going back to Peloton, I think what's interesting about this is with their move to software, I think there's a buyer underneath there somewhere. I don't know what the company's really worth because they're losing money still. But at some point, Peloton is moving themselves into a position where they get bought on weakness. And it could be Apple, it could be Amazon, it could be 100 companies that could want that software, that subscription business. It could be a Netflix, right, that wants to get into, hey, working out while you're watching Netflix. So again, there is Peloton. I'm wanting Peloton to crash because I think I want to buy that stock weaker. I was tempted last week. I think that's something more of a trade for me, but it's an interesting theme that you bring up. Okay, we're going to show the IPO. I think this is an index people should follow too in a crash. Is the IPO index by Renaissance? Absolutely.
Are you familiar with that private company, Mirror? That's also very popular.
I think that's the dumbest product, but Lulu's an investor. I think that really is a dumb product, but we'll see. And again, if it's going to work, Lulu will buy it. The other reason I love Lulu at 130 is like there's so many companies that buy Lulu at 80 or 90 if they got into financial trouble themselves. So again, I mean, that's what I'm looking for. I'd love to see it back retest, but you know, I have a position, but I'm not at 200. I'm not thrilled with it, and I hope the market bottoms and we go off to the races again, and I'll pay higher prices for a lot of these consumer brands, and people can look back and say, "Oh, I bought it at 130. Great." Go to that IPO ETF, Ivan. I think this is a really good one for people to have on their screens if they want to buy New America type stuff. This is an ETF that just buys all the latest IPOs or like the hottest IPOs.
Okay, this one is a little better.
And so in a market that keeps, you know, in a retest, you can see there around 20, that's a good level to trade against if you want to have a position. But on, you know, it was down, what was it down? Almost 50%. So this is a great tracker to kind of get a sentiment of just how bad it is out there. And that, you know, took out the 2018 lows, you know, as a global index, rightfully so, because in 18, only America was shut down. So I think there's a bottom in there somewhere. I don't think it's 25. I'm not rushing to buy it at 25, but if I see that in the low 20s, either selling premium against that and just owning that thing at $16 to $18. I mean, if you're going to bet on America, Renaissance does a great job with this ETF of owning a basket of the future. I'm also just between IPO and QQQ, which yields 1%. I mean, that's kind of how I think most people, if you pull up QQQ, Ivan, you know, some combination of these type of ETFs is the NASDAQ bounce was not great. And like you said earlier, it's because the casinos and the home builders and all the leverage things in the old economy bounced the hardest because they sold off the most. So this is what gives me pause about the market is no, you know, the QQQ did not sell off as much, Ivan, as everything else, but also the bounce was really weak.
Yeah, I mean, the QQQ didn't even test its 2018 lows, so it's.
Yeah. So I do think there's more downside. If this crisis continues, look for people to liquidate Amazon, and you know, if the crisis continues, look for people to Amazon the stocks they're hiding out in, which are Amazon, Apple, Google. I think we started seeing that, and I think people just were like cooler heads prevailed for the short term, and then we'll see what happens in the coming weeks. Is that kind of how you feel?
Yeah, I think we will continue. We'll see a range bound action in the next few weeks, and some of the stocks that held the best during that correction might start to outperform again. While we see the laggards that bounced last week, they'll probably reverse lower.
Yeah, Google looks really weak. I don't know if that's tied to travel and advertising. I mean, obviously Facebook really weak bounce because of advertising. And you have to assume advertising business, especially because they deal so much with startups too, is going to be down. I mean, that is not a bounce. Like if people are excited right here, I think looking at the big tech stocks is a reason for me to be really concerned. You know, Trade Desk, not a big bounce. Anything. So Trade Desk, Google, Facebook, the ones that are most exposure, the winners with the most exposure to ads, did not bounce the best.
Yeah, maybe all this ordeal with staying at home and working from home will give a big boost to virtual reality, and since Facebook is a big investor in that space, also Google, so maybe that will start some.
There's something bigger going on. Facebook is kind of, that rally was kind of like Disney. That rally was super weak for one of the bigger. I mean, that was a serious rally. It just felt like, as I watched it unfold Wednesday and Thursday, as I sold stuff that I was buying, I was not impressed with it.
All right, just checking on the robots real quick, since I would assume that's also the future.
Yeah, great bounce. Good point. The robots. What are some of the? Yeah, Medtronic, iSurge, ResMed.
Yeah, I don't know. Some people, you know, using their iRobot as a dock, right? If you want to go out in Europe and have a dock.
It's bad business going into this, and you can see it just.
Yeah. Also, about here's AVAV, which is unmanned aircraft
business. Yeah. It's a bear market, man. That's some ugly price action.
It is.
What are the tickers you're going to watch this week?
Definitely anything related to the coronavirus. A lot of biotech in the space. I'm long a little bit of this one, and there are a couple other biotechs in that same space that I'll be watching very carefully for a trade. Also, the crude carriers
Huh.
continue relative strength and are breaking out since Saudi Arabia and Russia continue to produce record amounts of oil, and they have to store it somewhere. And the other day on Friday, I posted something on Stock Tweets and on Twitter that with oil currently at $21 per barrel, which is a multi-year low, especially in real terms, because $1 today is worth like 60 cents in the 90s. It has the purchasing power of 60 cents in the 90s. And if you take that into account, oil might be right now at like 30-year low in real terms.
Wow.
So definitely the move in oil has been significant, and as you saw in
Forget who I had on my podcast, Ivan. They were saying oil could be zero or negative because it's a hazardous material eventually, meaning, you have to pay to store it. So, and it wasn't like, and and they were talking about this at 40 and oil's at 20. I don't think it's a straight line that way, but as solar, and what's
yeah,
that?
why those
Wow.
companies, the crude carriers are doing so well. We talked about them 2 weeks ago, and now they're just starting to break out seriously. So take them more seriously. That's a major trend.
Yeah.
There is
Major trend, but cyclical. I mean, if oil runs to 40, these things will,
yes, the pullback, of course, because they're in the shipping industry, and the shipping industry is probably be one of the worst hit.
That's interesting, Ivan, on solar. So it's just same story, right? In a recession, these things do so badly.
Yeah.
It's just people don't want to spend on technology. So the solar stocks, as usual, which is why it makes them so hard to own, they just perform terribly in recessions.
As most stocks do. And
Yeah.
interestingly, last week we saw some big pullbacks in the grocery stores, in the Clorox, all those names.
Well, that was silly. They have no margins. I still don't understand why people chase those. I mean, I get it because it's like, oh, people are going to the grocery store, but that's just sucker's game.
And anything related to food, is just kind of doing well. Look at the biggest egg producer, Co-Main Foods,
Mm-hmm.
showing relative strength. They report earnings though on Monday.
So you're just keeping your eyes open for shorts and longs this week?
Oh, absolutely, absolutely. As I said, the stocks the laggards that bounce, I think many of them started to reverse on Thursday, Friday, offered some decent quick short opportunities. Booking the former price line. So to me, it will be really, really important to watch those stocks if they lose their momentum lows, because if they do, that will be a sign that most likely the averages will also reverse lower. And if this was the law, no one knows. We'll start to see more and more of the leaders that held better during that correction set up near their 52-week highs, build new bases, and start to break out, because we need to start seeing more stocks breaking out to new 52-week highs. Right now, that list is almost non-existent. So yeah, that's it. I still keep a large cash position, especially overnight, but I'm active during the day. I'm taking some.
You're active, yeah. I'm actively just talking to founders and talking to new entrepreneurs. But you and I have in this market. I think Ivan's. Last week we were both on the same page. There were some great things on sale, and that there was. It's not a safe trade, but it was one that I took. That trade for me is off. I'm backpedaling on the stuff that I don't think that, in case that was the one chance before the bear market resumes. I lightened up some things that just didn't bounce well in my 8 to 80 portfolio. If we look at Nike too, I mean, it bounced great, but it doesn't mean I wasn't going to sell some of my core position. And I'm happy to pay 90 in a stronger market to get my bigger position back on, but I'll take a 30% bounce. It doesn't make me happy to sell something I loved, but at the same time, I'm happy to put it back on my sheets. With long-term capital gains as low as they were, I'm happy to put it back on my sheets at 90 or 95 in a strong tape. Doesn't mean I've given up. It just means some people in a bear market need to stop looking at what they paid and figure out what they may need going forward. And that's just basic scenario analysis. It's just what happens in a bear market. It could be a grind, and every little bit of cash you have to buy stuff lower would or much lower would be, wow, pets, Chewy.
Another trend, just buying pet food online. And I just read that in the UK, they now plan to train dogs to detect, to sniff the virus, because dogs,
interesting.
It turns out dogs can sniff out, all types of diseases, and so including coronavirus. So that,
yeah, for the fear mongers, I'd say yes. Like, this is crazy. America's going to solve this because it's in their interest to solve this at a corporate level. As much as we can hate corporations and monopolies, it's in Amazon and Apple's and the drug companies' interest to get this thing solved quickly. And even if you hate the government, they are all aligned on getting this. No one's going to turn down simple solutions. And we already saw it this weekend. Abbott Labs, I think
they announced.
So great. That's exciting. I don't want to own the stock, but at the same time, because I think once one company has it, they'll all have it. In the good for, no one's going to be allowed to gouge at this market. So people were calling me, hey, should I buy Abbott Labs? I go, never, know it, don't care. I mean, that's just good for the S&P. Buy the S&P if everybody's going to get saved. Not one company that's making, but obviously a great stock over the decades. Yeah, great stock, and good for them. And that's what's happening, right? Like, corporate America is going to step up and solve this. So the doom and gloomers just are going to lose as usual once we get beyond the health crisis. But I just, too much headline noise, too many false. This is a bear market because of the economy and because of the health crisis. I don't think, we're going to have a month of hardcore testing, even if we can get the tests in people's hands before we can get data. Anything else is pure speculation. All right, so have a good week, my man.
Right, you too, Howard.
And hopefully people get themselves right-sided here and in a position to make some money, because there's going to be great opportunities.
Absolutely.
All right. See you, everybody.